Right now, as we watch the market move, Strive Inc. is trading at exactly 1.08 USD, down by roughly 0.035 cents or 3.12% for the day. If you are pulling up your trading dashboard or looking at your phone, you might see the red figures and assume this is just another small cap stock having a quiet, slightly negative session in a broader market that is trying to find its footing. The immediate intraday movement shows some volatility, oscillating in a tight range as traders try to decide if the current level is a floor or just a pause before further downside. But if you stop your analysis there, if you look at that 1.08 price tag, see the red percentage and scroll past to look at Tesla stock or Apple stock, you are missing one of the most aggressive, high-stakes financial transformations happening in the public markets right now. The expectation for a company trading at this price point, especially one with the ticker ASST, which formerly represented asset entities, is that it is a struggling microcap trying to survive in the digital marketing or social media space. Most investors assume this is a legacy play, perhaps a company managing Discord servers or running influencer campaigns that has lost its way. That is the expectation, a low-price stock with a confusing identity crisis. The reality, however, is violently different. What you are actually looking at is a company that is actively attempting to clone the MicroStrategy playbook, but at a much smaller, more nimble, and significantly riskier scale. Strive Inc. is no longer just a business operating in the background. It is morphing into a leveraged Bitcoin treasury vehicle backed by high-profile figures who believe that the future of corporate balance sheets lies not in cash, but in hard digital assets. This isn't a marketing company anymore. It is a financial vessel built to absorb Bitcoin. To understand why this is happening and why that 1.08 price level is so deceptive, we have to strip away the service level noise. Usually, when you look into online investing or browse investing sites, you are taught to look at PE ratios, revenue growth from operations, and customer retention. If you apply those traditional metrics here, you will be confused. The narrative here is not about operational cash flow from selling services, it is about balance sheet engineering. The company is raising capital through preferred stock offerings and other equity instruments, specifically to buy Bitcoin. This is a strategy that requires a massive suspension of disbelief for the conservative investor, but offers a potent narrative for the crypto bull. The intraday drop we are seeing today, that 3.12% slide, might be noise, or it might be the market reacting to the sheer volatility of the asset class Strive is tethering itself to. When you open your Fidelity mobile app or log into Interactive Brokers Trading, you generally see companies categorized by sectors: technology, healthcare, utilities. Strive is breaking that categorization. It is technically in the financial services or technology sector, but it functions more like a closed-end fund or a holding company with a singular directive. The tension here creates a fascinating dynamic for the stock. Traders are not buying ASST because they think the company's legacy business is going to explode. They are buying it because they want exposure to a management team that is willing to bet the entire firm on the appreciation of Bitcoin. It's a leveraged bet. If Bitcoin rallies, the company's book value expands, and theoretically, the stock price should follow, often with a multiplier effect. If Bitcoin crashes, the floor falls out. Let's talk about the structure of this trade because it is complex. You might be used to Schwab Intelligent Portfolios or a SoFi robo-advisor managing your risk, smoothing out the bumps with a mix of bonds and blue-chip stocks. This is the opposite of that. This is concentrated risk. The company recently executed a reverse acquisition involving asset entities and Strive enterprises. This is a common maneuver in the small-cap world to get a private company public quickly without the long, drawn-out process of a traditional IPO. By merging with an existing public entity, asset entities, Strive effectively took over the ticker and the listing. This is why you still see the ticker ASST and why some legacy data on your Robinhood stock trading interface might still refer to the old business model. But the real story, the one that isn't priced in for the average retail investor, is the sheer aggression of the pivot. Strive isn't just buying Bitcoin with spare cash, they are issuing securities to fund these purchases. This is financial engineering 101 for the modern crypto corporate age. By issuing preferred stock, they are essentially printing paper to buy digital gold. It is a strategy that relies heavily on the market's appetite for that paper. If investors stop buying the offerings, the buying pressure for Bitcoin stops and the narrative slows down. Today's price action of 1.08 suggests that the market is taking a breather, assessing whether the company can keep up this pace of accumulation. I want to pause here for a second because this connects to how most people handle self-investing. When you manage your own money, you are constantly weighing conviction against safety. Investment help usually advises diversification, but Strive is making a concentrated bet. They are looking at the macro environment, inflation, global currency debasement, and the institutional adoption of crypto and saying, we are going all in. It's a polarizing stance. It's why you see such intense debates on forums and social media about this stock. It draws in the true believers and repels the traditionalists. Speaking of believers, we have to talk about the personnel. The involvement of figures associated with the anti-woke investment movement adds a layer of cultural friction to the stock. Strive Asset Management, the firm connected to this entity, made a name for itself by challenging the ESG, environmental, social, and governance narratives pushed by giants like BlackRock. They advocated for excellence capitalism, the idea that companies should focus solely on products and profits, not politics. Now, seeing the Strive brand pivot so hard into Bitcoin is an interesting evolution. It suggests that they view Bitcoin not just as a currency, but as the ultimate neutral asset, free from corporate boards and political pressure. This philosophical alignment is important because it tells you that the management isn't just doing this for a quick buck, they are ideologically committed to the asset class. That kind of conviction can drive a stock through periods of intense volatility, but it can also blind management to risks. Now, I want you to take a moment and think about your own portfolio. Comment below how many shares of Strive you currently hold, or if you are staying away from these types of Bitcoin proxy stocks entirely. I am genuinely curious to see where the sentiment lies among you all. Let's get back to the mechanics. The company recently announced plans to acquire Semler Scientific. This is where things get even more interesting. Semler is a medical technology company that also decided to adopt a Bitcoin treasury strategy. So you have Strive, a Bitcoin treasury company, trying to acquire Semler, another Bitcoin treasury company. It's like a nesting doll of Bitcoin leverage. The logic is that by combining forces, they can create a larger balance sheet, access more capital markets, and buy even more Bitcoin. It's an arms race to accumulate as much of the supply as possible before the price potentially runs away. If this merger goes through and is integrated successfully, the combined entity could hold a significant amount of Bitcoin relative to its market cap, potentially making it one of the largest corporate holders outside of the massive giants like MicroStrategy and Tesla. However, we have to look at the risks. That 1.08 price today is fragile. Small-cap stocks are notoriously volatile. They are subject to liquidity crunches. If you try to sell a large block of shares on a Fidelity trading platform or through Interactive Brokers stock trading during a panic, you might find that the bid-ask spread widens dramatically. You might not get the price you see on the screen. Furthermore, regulatory risk is always looming. The SEC watches companies that act like ETFs but are registered as operating companies very closely. If the regulators decide that Strive is effectively an unregistered investment company, it could face legal hurdles that would crush the stock price. This is not like buying NVIDIA stock, where you're betting on chips and AI demand. Here, you're betting on a regulatory loophole staying open and a digital asset appreciating forever. Let's look at the chart dynamics a bit deeper. When a stock like this drops 3% on a Monday, it often signals a lack of immediate catalysts. Traders who bought in on the initial news of the merger or the Bitcoin purchases might be taking profits or rotating into other high beta names.